So a lot of time what we see in the morning is a little trading range develop. On a 1 minute chart, the range is a little bit more clear. And what happens, and here's the top of the trading range, is it generally formed within the first half hour to hour. And then the first breakdown that we get below that trading range typically will predict how the rest of the day will go. So if we get a break down below, typically we're going to close lower. If we get a break above that trading range and maybe a pullback and it acts as support, we would expect to see a move higher. So we saw this trading range develop this morning. It broke very early to the downside, and then we have a pattern here that's called a descending triangle. These descending triangles are continuation patterns. So a continuation pattern in this case means downtrend. It's just a typical consolidation. We have the downtrend, the consolidation, and a continuation pattern down. And what we can do with these is we can actually get a target. We measure the bottom of the triangle, which is over here at about 102.50. We measure the top of the triangle, in this case about 105.50, and we have a difference of $3. When that triangle breaks, and I mean breaks below the support line over here, we take the breakdown point, which would be 102.50, subtract the $3, and our target is 99.50. These are pretty reliable measurements, and if you look at my contributors letter today, I posted my targets for all these, and I think 2 out of 3 were just like almost right on, almost dead on. In this case, though, I think the S&P missed it by about $1. What I also talked about a little bit was the possibility of a false breakout to the downside. A false breakout is basically what happened today, actually. We get a breakdown below support. Here's our support level. And what happens is it draws in a lot of short sellers because they see that support break. And when the market reverses and goes back above that former support level, that support level now becomes resistance. It's a difficult place for the market to go through because this is where sellers are. But when this happens and we get a break above, these failed moves typically turn into very violent, fast moves to the upside, or in the reverse case, a failed breakout to the upside would reverse and move down very quickly. And we also saw increasing volume on that move. So that was one of the scenarios we were looking for today. What got this market kick-started, France proposed an emergency G8 summit, and that's basically fueling the idea in the market that there's going to be talks of the Fed and the European central banks to coordinate a rate cut. Now, the Fed is supposed to meet towards the end of October, and the Fed funds is now pricing in a 55% chance that we'll get a 75 basis point cut instead of a 50 basis point cut. Last week, 75 basis point cut chance was priced in at 0%. So the market is looking for that cut. Also, because of this French proposal, there's the thought that we might get an intermediate cut, meaning that it will happen before the end of October. Well, I've got the S&P 500 up. Let's take a look at 3C real quick. We're going to take a look at what happened this afternoon. 3C's in yellow here. You can see price in green. Let me grab this marker again. And 3C basically should track price if there's nothing interesting going on. But what happens here when we have a low and then we have a lower low made in price, that's what 3C should be doing. It should be making a low and a lower low. When we see this kind of action, we see a higher low. This typically is indicative of accumulation, meaning buyers are stepping in and buying this low, and we see a rally off of that. So 3C is my indicator that I wrote, and I share it with people. I'm a Warden Telechart and Blocks affiliate, so all I ask is that you use a link from my site, tell them that you heard about Telechart or Blocks through Trade Guild. Then send me an email and I'll get you set up with the indicator, but I have a couple different versions. This is a 1 minute chart, so this looked a lot like the probability of a move higher because of that accumulation that we saw there. If we look at a 5 minute version of this chart, we see something even more spectacular. This is actually called a positive leading divergence. Here's a relative divergence, relative between this point and this point. We have lower low. Okay, here we have higher low. That's a relative divergence. When we see something like this making new highs above all this territory, that becomes a leading divergence. So we saw a nice positive relative divergence, accumulation, and this leading divergence is telling us most probably that buyers are buying this rally, and what buyers have been doing, or traders have been doing, is selling the rallies of late. So this is an encouraging sign also for a possible reversal in the market. Here's another formulation of 3C. This one's in orange, and we're going to zoom in a little bit tighter here. It's not quite as obvious, but again, we have the lower low in price, and we see the higher low over here in 3C, also indicative of accumulation. So I'd like to look at a couple different versions of this indicator. Over here, we do see a negative divergence over here, and we did see a pretty nasty sell-off in the last couple minutes, or actually in after hours. So this was actually looking like it was calling that sell-off, so that was kind of interesting. If we zoom out a little bit and we take a look at this indicator down here at the bottom, that's Warden's balance of power. And what I want to point out here was keep an eye on green price, which is moving down. Over here we see the red distribution, the selling, and what we see is that abating, and that eventually turns into accumulation. So again, another positive sign of buyers stepping into this market at the lows. That was the 1 minute version. Here is the 5 minute version of both 3C and BOP. And just taking a look at 3C again, we see this very powerful positive relative divergence, and then a very nice leading divergence. So one more formulation of 3C, and this one is going to be in blue. This one tracks a little bit faster than the other ones do. It's a little bit more sensitive. So again, if we zoom in towards that 245 area where the market turned, again we see that positive divergence over here in 3C. One other thing is the indicator down here in red. This is time segmented volume. 3C is actually based off of that, which is a proprietary indicator for Warden, and that's why 3C only works with telechart and blocks. But again, another version of a positive divergence over here. Lower lows in price, higher lows in the indicator. So this is telling us accumulation. So that's the 1 minute version. Let's take a look at the 5 minute version. And here we see a very, very positive looking 3C over here. Nice relative, nice leading divergence. And here's a 10-minute version. Again, nice relative divergence. Showing a little bit of a negative divergence towards the close, which in after hours we're seeing the market sell off a little bit. So it's just putting the pieces together, taking as many time frames and comparing. If we look at my heat map, which is down here, this is actually a combination of a couple different time frames of MACD. This is another indicator that I wrote and I like to use. Basically, when I see blue or green, in this case when it's below the zero line, this is where I want to be shorting, and when I start to see red, this is where I want to start closing out my positions. And over here in this heat map, you can see now we're in what looks like a buying mode. And over here in RSI 5, we see a relative positive divergence again at that bottom. So a lot of indications here that this market's moving in the right way as far as a bounce. If we look at balance of power, which is going to be down here in the bottom, I'm going to zoom out to about 2007. Hopefully you can see that. What you can see as this market has been heading down since the top at 2007, you can see massive distribution into the top over here, and you can see it's actually turned positive over here. There's a good chance, as I've pointed out in my major market call contributors letter, there's a good chance that this may be a market bottom. Bear markets tend to end in October. We have some other evidence here of the divergences. Again, this is an hourly chart. You can see it again here. And here's a half an hour chart. Again, we can see the heavy selling over here, and it's just tapering off. And finally, even on a 15-minute chart, we see this red just dying off and the green accumulation stepping into place. Right now, let's switch it up a little bit and we'll take a look at the QQQQ, which is the ETF for the NASDAQ 100.